Welcome to Talk Tickers, where we dive deep into the earnings calls that are moving the markets. Today, we're looking at Aehr test systems, or AEHR. And let me tell you, their Q2 fiscal 26 results were, well, a tale of two cities. On one hand, they missed expectations, but on the other, they're painting this picture of a super promising future. So, the big question is, which story do you believe? Let's get into it.
All right, here's how we're going to break this down. First, we'll hit the Q2 numbers, the misses. Then we'll cover management's big pivot to AI. After that, the bookings bombshell they dropped. We'll look at the disconnect between the market and management, and finally, we'll give you our take on what's next.
Okay, Section 1, the Q2 snapshot. Let's just say it's a tale of misses. You know, there's a reason the stock took a hit after hours, and it all starts right here. Even management called the quarter softer than anticipated.
So let's start with the bottom line. GAAP EPS came in at a loss of 11 cents. Now, Wall Street was expecting a loss, but only of about 8 cents. So, yeah, that's a miss right out of the gate.
But whoa, the real surprise was on the top line. Revenue, just $9.9 million. That's a full 20% below what analysts were calling for, and it's down 27% from the same time last year. I mean, that's not just a miss. That's a pretty significant shortfall. And just to complete the trifecta, their non-GAAP EPS also missed, though just by a penny. So you look at all the headline numbers, and the story is pretty clear. It was a weak quarter, no two ways about it.
Now, when you dig a little deeper, it doesn't get much prettier. Bookings were pretty soft at just $6.2 million, but honestly, the number that really jumps off the page is the gross margin. Look at that. It cratered from over 45% last year all the way down to under 30%. Management's explanation? Lower sales volumes and a product mix that just wasn't as profitable.
So you'd think with a quarter like that, management would be on the defensive, right? Well, not exactly. They pretty much immediately changed the subject. Let's talk about their big counterpunch, the pivot to AI.
And here's the quote from the CEO, Gain Erickson, that says it all. Basically, yeah, Q2 is soft, we know, but hey, look over here. We're making amazing progress, and we are super excited about the future. The message was crystal clear. Don't look back, look forward, especially at the huge opportunity in AI and data centers.
And this is what that future looks like. This slide is actually super important because it shows a deliberate shift in strategy. You see, for the last couple of years, Aehr has been all in on silicon carbide for EVs. That was their bread and butter. Now, they're actively trying to diversify away from that, pushing hard into these other high-growth markets to spread their bet.
And to show this isn't just talk, they dropped this little nugget. Their lead customer for AI processors has actually asked them for more capacity. Not only that, they're planning to use Aehr's more complex, integrated systems. That's a big deal. It suggests this isn't just a one-off order. It's a real deepening partnership. Okay, so after setting the stage with the AI pivot, management went for the knockout punch. This is what I'm calling the bookings bombshell. They basically tried to make everyone forget about Q2 with a jaw-dropping forecast.
And here it is. This number is everything for anyone bullish on this stock. Management is guiding for $60 to $80 million in bookings just in the second half of this year. Let me put that in perspective for you. They just booked $6.2 million in Q2, $60 to $80 million. That's more than their entire revenue for all of last year packed into just 6 months. It's a massive, massive number.
So what's the point of dropping a number that big? Well, it's all about setting the stage for what comes next. If, and that's a big if they can actually hit that bookings number, it means business is about to ramp up like crazy. It totally changes the company's growth story and sets them up for what they're calling a very strong fiscal year 2027.
All right, so that brings us to the core conflict here. You've got a really weak quarter in the rearview mirror, but this huge optimistic promise on the horizon. How on earth did the market digest that? Let's look at the disconnect. Well, the initial verdict from the market was not great. The stock immediately dropped 4.4% after hours, and on heavy volume too. It's pretty clear that, at least for now, investors are weighing the bad quarter they can see more heavily than the great future they're being promised.
But you have to put that drop in context. Look at the one-year return. Even with this pullback, the stock has been an absolute beast, basically keeping pace with the semiconductor sector ETF, SOSX, which has been on fire. What this tells you is that there were some incredibly high expectations already priced into the stock before this earnings report ever came out. So this is really the fundamental question you have to ask yourself as an investor. Is this just a little air pocket, a temporary blip before a massive ramp-up? Or has this officially become a show-me story where you need to see the proof before you believe a word of the guidance?
Okay, so we've laid out the bad quarter and the big promise. Now it's time for our take. Here's what we think comes next.
Look, it really boils down to this. The bull case is simple and powerful. If that $60 to $80 million bookings forecast is real, this stock is going way higher. But the bear case is just as simple. Those are just forecasts, not signed contracts. And, let's be honest, this company has had delays before. So the bears are just going to sit back, point to the current losses and cash burn, and say, prove.
So, where do we land? We're calling this a market perform. Honestly, the gap between the reality of Q2 and the promise of the future is just too wide right now. The upside could be enormous if they pull it off, but the execution risk is also huge. It feels balanced. Until we see some actual, tangible proof that those big bookings are starting to roll in, we're staying on the sidelines.
Okay, so how could you trade this? Well, here's an idea. The options market was braced for a huge 13% swing on earnings, but the stock only moved about 4%. That's interesting. Because with this massive bookings forecast hanging out there, this stock feels like a coiled spring. It's either going to be proven right or wrong in the next couple of quarters, and either way, that could mean a big move. So a long straddle, where you buy both a call and a put, could be a way to play it. You're not betting on direction, you're just betting on volatility. You're betting that the stock is going to make a big move, up or down, as this story finally plays out.
And that's our look at AHR Test Systems' wild quarter. As always, remember, this is not financial advice.